Some of your notes have been pretty extraordinary in terms of the sheer scale of money that is entering this space and where you see some of the price points going. Can you just talk us through your main thesis of what the ETFs could do for Bitcoin and the ecosystem more generally?
Yeah, happy to, Caroline, and thanks so much for having me on. So we put out a note earlier this week, and we are talking about $220 billion of net inflows into these ETFs over the next 3 years. So for context, there's been about 10 billion of net inflows over the first 2 months of launch, but we see that accelerating quite a bit. And the reason being is that we've essentially opened up a lot of additional capital that historically, up until January of this year, was shut out of investing in crypto and in Bitcoin specifically. The biggest pool of that is retail investors, advisor-led money. There's about $25 trillion of assets where advisors really want to custody the money within their own custodian, not move it out to somewhere like Coinbase. And so ultimately, now these advisors with the ETF approval can start to look at that. But I think we're in the first inning. I don't think advisors have really been allocated yet. So we see flows actually accelerating from here. So there will be volatility, but in my career covering financials and fintech for 20 years, follow the flows. And when there's money coming into a new market and it's substantial, which we think it will be with these ETFs, it's really transformational.
It is amazing that we have been talking some of these cycles for years, but only now do we hear the likes of you, Devin, talking about $220 billion coming in. And we hear Bernstein yesterday out with a note saying we are entering this monster cycle for crypto. What changed your tune? Was it the ETF?
Yeah, we've been consistently constructive on the space. And I cover Coinbase, which is, in our view, kind of the biggest on-ramp in the public markets into the industry. I think you guys touched on it. There's a lot of speculation going on. You have Bitcoin, and then you have 20,000 other cryptocurrencies. And I think that many of those cryptocurrencies are going to be worthless when you look out over the next couple of decades. That being said, we are in the early innings, and so people are putting their chips on various blockchains that they think will have development on top of them. And just like you would in a technology stock or even a biotech stock that is, in its formation days, it's going to take 10 years to get to commercial application. And a lot of these blockchains are in their first inning, and people are speculating on which ones will be utilized. And so I'm very bullish on the application of the blockchain technology. That's kind of the broader crypto ecosystem that Coinbase is benefiting from. And then the ETF for Bitcoin is, in my opinion, kind of its own animal. But we do see, again, we think people are going to increasingly move some money, small amounts, but small amounts. Now that you've opened the door to, in our opinion, over $100 trillion of capital in the U.S. that potentially could look at allocating something here. And we're shut out, much of that until January 11th.
You mentioned Coinbase, and just a disclosure that my husband is a director over at Coinbase. But I am interested in outside of the space of just Bitcoin. Bitcoin has sort of hoovered up all the oxygen in terms of being able to shine a light on the price, being able to talk about the ETFs, but there is talk of an ETH ETF. There is still Solana doing very well, for example, other altcoins. How does that spillover effect continue?
Yeah, it's a great question, Caroline, because I think there was a lot of discussion in the market leading into the Bitcoin ETF that would be cannibalistic and that everybody would just trade the ETF and then that would hurt Coinbase. We were taking the other side of that argument, but I think the evidence is now clear that in reality, what's happened is there's been a significant amount of more money that's moved into the broader space, both Bitcoin, where Coinbase is participating in a lot of the trading of the underlying assets in the ETF, and then elsewhere. But their volumes are up over 100%, trading volumes over the first quarter last year. And a lot of that's happening in all of these other assets because, again, people are more interested in learning about the space and taking views on other blockchain technologies and which ones could be successful. And so that's really what's happening. I think we're still kind of in the early days of that as well. That's Coinbase, but then Coinbase is also, in our opinion, going to have their hand in virtually every aspect of how this industry grows, whether it's tokenization of real-world assets, whether it's payments and remittance and development of Web3 applications. They have their own blockchain called Base. They're very active in staking, and there's going to be a lot of innovation in this industry that I don't think has even happened yet. So Coinbase to us is really a play on that growth, even more so than just trading volumes and the exchange activity.
It's interesting that Bernstein called out Robinhood as the key play. You've got a $25 price target, I believe, on that particular company. Where else could be benefiting in terms of brokerages? Is it all about the institutional play and the retail play still?
Yeah, I think Galaxy is a name. They're Canadian listed right now, but that's Michael Novogratz, as you guys mentioned. They're clearly a public market play here. We know a lot of the private players in this space, and there's a lot of really interesting companies in the private markets. Robinhood, clearly has an investor base that is, I think, in the demographic that is active in crypto. It's not as big of a driver for their business model. Coinbase is really a pure play on the crypto ecosystem, both trading, but then also development and how is blockchain used over the next 5 to 10 years. And they're going to participate in all that. I think Robinhood has, their tentacles into some of that, but, Robinhood's a broader brokerage, which is good. A lot of the other brokerages really, they're barely there yet. And that's also, in our opinion, part of the opportunity. The self-directed market, I would put in that bucket of, retail investors. And we estimate of that $220 billion of net inflows, 160, 170 billion of that is still going to come from retail, whether it's self-directed or advisor-led. And I've covered the wealth management market for 20 years. These are folks that, again, they're relatively conservative, but they want to invest where their customers want to invest. And I think that people are going to want some small access to this new asset class.